Some think this young woman's small tailor shop only works with cloth and thread. Little do they know, something greater is quietly being pieced together.
Thank you. Kongsi. Bye-bye.
Girls, let's pack.
Boss, actually there's another job.
What? How can we finish it in time? Who is it for?
Oh, my best friend.
Boleh je. You go now and enjoy your reunion dinner. Go.
Go. You can come back tomorrow.
Silap-silap kita ni orang yang last kali rushing for Chinese New Year.
At least you got salary and job, ma. No complain, lor.
Less talking. Faster finish this lah. And don't forget, once this is done, we still need a design that can represent all of us, you know. We can make it, right? It's Chinese New Year, you know. This is so heavy and muddy. Why do you always pick the lotus?
I remember when I was a young girl, my mom told me that the lotus is a lot like women. Kaini, Maru, Amay.
Bos, ingat tak masa tu? Ada tak mampu nak bayar rental rumah. Tapi you datang.
Why don't you come work with me?
You showed me how to live with dignity.
I telah cakap berapa kali, kerja biar tak boleh bawa anak, Ma.
You can speak up for yourself.
There was a time I honestly didn't know how to continue living. It was you. You told me everything was going to be all right.
It'll be okay. Come, follow me.
And that has carried me until today.
We made it for you, the lotus. Because it was you who told us that the lotus
Doesn't choose easy water to grow in.
Even when it grows from mud,
It keeps its beauty, untouched by what tries to hold it down.
It is you that reminded us, no matter how difficult things become, you don't lose who you are.
Thank you, everyone. In the end, the greatest wealth is knowing our true worth.
And that is the story of this young woman's small tailor shop that has been quietly helping hundreds of women piece their lives together again.
Right. Morning, everyone. Welcome back to our morning kappa at 8. I'm Joseph here. So we have a very nice background, and while this week everyone is busy for the Chinese New Year preparations, we just again look at the market, and we do see that hopefully the Hong Kong will have a Chinese New Year rally. Right, at this juncture, you can see that the Hang Seng Index did make a very strong rebound near the 20 days moving average. Right now, it's eyeing to move towards the 28,600 point level. So on the downside, we still keep our support level at 500, and that's where our stop loss point is. So as long as the Hang Seng stay above this level, we keep the bullish bias intact. And looking at the Hang Seng Index, yesterday the sentiment lifted by two very important counter, 710 cent and Alibaba 9988. Right. Meanwhile, we do see like zinc mining 2899 as well as the SMIC also lifted the sentiment in the Hong Kong market. So basically this round the rebound was led by the tech stocks. Let's see whether this trend will sustain. Last week we did mention that we do observe that some of the funds they start to actually move rotates into the bank stocks, insurance, as well as the property counter. I think these are the three counters that these are the three sectors that you should also pay attention to, right? And as of yesterday, we published our technical reports on two um, Hong Kong company, and one of them is actually the Zijin Mining, which in tandem with the gold price, we do see that the Zijin Mining have a breakout from the 40 Hong Kong dollar. So next level will be 43 and followed by 47, and then downside support will be at 37 Hong Kong dollar, right? And looking at the commodity market, I think last 1 month, the talking point will be whether what will be the peace discussions between the US and Iran progress, right? At this juncture, you can see that the WTI crude is trading above the 200 days long-term moving average line, and also standing steadily above the 62. So if today it break past the 65, it may go higher towards the 68 US dollar per barrel, right? At this juncture, we keep our stop loss at 58 US dollar per barrel. As for the gold price, it underwent a very erratic move over the week, right? There was a very long bearish candlestick that have saw a very strong profit taking. Thereafter, the gold rebound off from 4,550, and right now about to test the 5,090. So if you break past this 5,090, right, which is above the midpoint of this long bearish candlestick, then on the bulls we have more technical advantage than the bears, right? So I think last 1 week the market focus still on the gold as well as the silver, but for our side we will continue to monitor on the gold futures, right? And if you want to actually write on the gold stocks, there's one counter in the US, it's called NEM, right? And the NEM basically is that gold mining in the US, and the share price also have been moving upwards. I think last 1 week, quite a lot of a lot of dealers and remisiers has asked me about the gold stocks in the US market. So basically, there are two counters. One is the gold NEM, Norway, England, Malaysia. The other one would be FCX that actually track the movement of the copper price. Okay, and as of the yesterday, we do see that the market or the funds are flowing back to the tech stocks, and I think that overall market, right, either you go for the tech stocks or you go for the non tech stocks. Also yesterday, they have a chance to discuss the market with a few dealers and share with them that the views that apart from the tech stock, you may also can pay attention to the oil and gas counter, as we understand that one thing that happening right now is US is going to redevelop reinvest in the oil field in the Venezuela, and they are going to import the crude oil from Venezuela for the refiner in the US player. So I think that due to that, you can see that some of the US oil and gas counters have been actually moving up steadily for the past 1 month. Talking about the balance sheets, I also mentioned to you that because of this ESG, for the past several years, the oil and gas counter have actually pared down their debt level. And in terms of gearing, oil and gas stocks have actually varied. I think among sectors, oil and gas is the lowest gearing among all. So a lot of counter close to net cash positions in the oil and gas sector right now. Although the oil price may actually move downwards, but that is not going to impact them from the balance sheet angle. Maybe they actually make lesser profits. Move back, you can see that the oil price or oil counter or the energy counter has actually moving up on high fashions. So apart from the tech stocks, semicon, the memory counters, the front end player, you can also look at the oil energy counters. So apart from the Schlumberger SLB, right, we do actually look at ExxonMobil, which also break past 145 US dollar, now heading towards 155 and followed by 165, right? Then on, we also look at the bank stocks. As we know that Dow Jones have quite a number of finance counter, and looking at Donald Trump posting recently, he made a forecast himself that he's looking at 10,000 for the Dow Jones. So from 5,000 to move to 10,000, I think the bank stocks will play a very important role to lift the index higher. So for the past 2 days, Citigroup have actually break past 120, now moving towards 128 and followed by 135 US dollar. So downside support will be marked at 115, right? And for Malaysia market, right, we think that FKRI remains bullish right now. Keep our stop loss point at 1690, right? And so I think as you notice in our market, right, now the funds are still going into the big cap, especially the index link counter. Funds are actually rotating out from the mid cap and the small cap counters, right? And so I think hopefully the with the FKRI moving higher and higher, right, the funds will start to rotate back to the small mid cap again. Okay, but at this juncture, we'll keep a bullish bias on the FKRI. Now, as for the FCPO, right, market is actually talking about what would be the export number like for the next few months. I think that right now, Bursa is actually having the palm oil conference. We are waiting for the market consensus on what will be the next this year production number, as well as the inventory and the export number. And as of now, we do see that the CPO have pulled back from 4,003 coming towards 4,002, right? From a technical picture, right, we think that 4,001 will be a very important support level. For the past 2 months, CPO have actually made a very strong rebound. So as long as stay above the 4,001, the counter trend rebound formations will be intact. Otherwise, between this 4,001, then on the bears, we have more advantage than the bulls. Okay, so we still keep a bullish bias with our stop loss point at 4,001. Now, as for the trading stock this morning, firstly, we look at Sime Darby, which can break past 2 ringgit and 20 cents. Next level will be 2 ringgit 35 and followed by 2 ringgit and 45. Downside support is 2 ringgit and 10 cents. And then we have time.com, they break past 6 ringgit yesterday. Next level will be 6 ringgit 25 and followed by 6 ringgit 45. Downside support is at 5 ringgit and 80 cents. So this will be two breakout stocks that we like to share with you this morning. So I'll stop here and pass the sessions to Jeffrey on the Axiata company report update. Thank you.
Okay, thanks, Joseph. Okay, we have a report on Axiata Group. This is basically an update post the annual investor and analyst day that they had yesterday afternoon at KL Hilton. Basically, they've sharpened their narrative in terms of the focus on dividends and valuation expansion. I.e., the monetization of assets, both the telco as well as the longer-term techno or the technology assets that they will be getting into. They're basically expecting a step up in earnings from FY27, and this is basically will be driven by stronger integration synergies both in Malaysia and Indonesia. As you know, Malaysia, they're into the final year of the integration between Celcom DG. Indonesia, they're merging the assets between Smartfren and XL Axiata. That integration has been accelerated. It just started third quarter of last year. They expect it to complete by middle of 2026, so it's middle of this year. Overall, we remain constructive on the stock. Asset monetization and balance sheet deleveraging are basically the key investment narratives. Just touch on a couple of takeaways. Firstly, they've sharpened their headline financial targets. They now guide for DPS growth or dividend per share growth of at least 10% year on year. That takes effect from this year, FY26. Net debt EBITDA target is now less than 2 times. Do note that the targets are business as usual driven and excludes monetization. So monetization refers to the two infrastructure assets that they are looking to divest, which is E.co, the tower co, as well as LinkNet, which is the fiber company that they own in Indonesia. I think with respect to E.co, I think they are basically, fairly upbeat in terms of wrapping up their transaction in this FY26 financial year. But I think for LinkNet, maybe a bit of delay in terms of their divestment due to the recent ongoing uncertainties with regards to the Indonesian market, investability concerns by MSCI, and also the recent downgrade credit rating by Moody's as well. So that may, hamper the sale of that particular LinkNet asset in Indonesia. I also want to point out that the integration synergies in Indonesia is actually progressing fairly well. They expect to close that transaction middle of this year. I think for Celcom DG, I think all eyes will be on the results later this week. The management has basically said that they're wrapping up the integration. It's almost 90% completed. The outstanding is basically the IT stack upgrades, which will continue well into 2026 and potentially spill over into the first quarter of next year. Synergies, I think for Malaysia, FY27 is the year where there's a little bit more synergy. So I think 26 in terms of Celcom DG will still be a transitory year as a whole. Frontier market assets, in Cambodia, Sri Lanka, and Bangladesh, all executing pretty well. Post-economic crisis, Bangladesh is basically getting into a general election phase. Elections are due in 2 days, and they do expect the backdrop to improve here on in terms of the market. Indonesia market, I think the repricing in terms of the mobile, they've seen 2 quarters of consecutive growth already, 5% Q on Q in terms of ARPU uplift. And things are, looking on balance a lot better versus 12 months ago when, that disruptive, the price competition started. So within its frontier markets, they are basically gunning for ROIC above WACC. This is basically the North Star, target that they're looking at. Both Dialog and assets over in Sri Lanka and Bangladesh are already generating ROIC above WACC. Robi should follow suit this year. In terms of M&A targets, they're looking at 2 particular segments here. Cybersecurity is one. The other one is basically potentially an outfit within the AI space, which is something that they will be targeting over the medium term. So It could potentially be some partnerships with like-minded investors within the AI space. Cybersecurity, I think there are quite a number of smallish mid-size outfits out there that can potentially complement their deep domain expertise. They already have some cybersecurity offerings within the various opcos that they have. On the market news that Telenor Group will be selling off its they are basically in the stage to basically offload their stake in DTAC in Thailand. News are that they may exit that South Asian business completely. As you know, Telenor is the other shareholder in CelcomDigi. They have a 33.1% stake. Axiata Group has the other 33% stake. So there's been some rumors that Axiata may end up having to acquire the remaining Telenor stake if Telenor decides to exit. At the session yesterday, various questions were asked by the investment community as an analyst. Management said that this is not basically being discussed at this point. Not ruling at this will potentially that development will potentially come back in when the integration is completed on CelcomDigi in the year about 2 in terms of the overall synergies have been harvested and all. On the balance sheet wise, I think Axiata is actually doing very well in terms of deleveraging the balance sheet. Net debt EBITDA target, I think, on track to go below 2.5 times by end of 2026. So that was the initial guidance. They've done quite a bit in terms of reducing holdco debt. That number is about 7.2 billion. Overall group debt has come down by 7.2 billion as a whole, just within the first 9 months of this year. I mean, if you look at the XL Smartfren merger and all that, they have actually deconsolidated the debt from second quarter of second quarter of 25. So if you look at the overall net debt with the target, that has also benefited from the deconsolidation of the Indonesian debt. Valuation wise, I think the stock looks quite undemanding. EV/EBITDA mean 10-year historical mean is trading at about almost 2 times, or rather 2 SD below historical mean. So I think at this point, valuation has sufficiently pricing concerns over execution and policy headwinds, which are key bugbears for the stock as a whole. Risks are basically delays in the realization of synergies, frontier market competition, weaker than expected earnings, as well as the continued strength of the ringgit, which would basically lead to some translation losses in terms of the OpCo earnings. So we're still keeping our buy call, SOP target price at 295, pending the results released by the end of the month. Okay, I'll pass you on to Meng Horng next on MPI. Thank you.
Thank you, Jeff. So this is MPI first half results. First half numbers, core PATAMI of 116.4 million, which was up 56% year on year. Came in within expectations at about 56 and 57% of ours and consensus full year estimates. While the results may be slightly ahead, if you look at the full year estimates, we remain to be conservative given the potential headwinds from the ongoing memory chip shortages, as well as the unfavorable forex trend. Now, in terms of the first half numbers, I think we saw both the profitability in Kasem Suzhou as well as Kasem Malaysia continue to improve, supported by higher utilization rates as well as operational efficiency gains. If we zoom into second quarter numbers, I think USD revenue continue its uptrend with 26% year-on-year growth to about $152 million US dollar. This is marking the 8 consecutive quarters of year-on-year growth. Core PATAMI in second quarter jumped 84% year-on-year and 11% Q-on-Q to 61.2 million, supported by stronger revenue, economies of scale, as well as a lower effective tax rates, despite the USD depreciated about 6% year-on-year against the ringgit. EBITDA margin also expanded to 22.9% from 20.8% thanks to the better efficiencies. In terms of FY26 outlooks, I think, strong program visibilities from its key customers should continue to underpin a stronger FY26 as a whole, alongside re-accelerating, China automotive demand and emerging opportunities in robotics and power management packages. Now, MPI will continue, its capex cycle, focusing on new lines, for its server packages, automotive as well as power management applications. They will expand in Thailand after the acquisitions of the plant from Infineon Technologies, as well as in the continued ramp up in its new Suxiang plant in China, which is expected to be operational second half of FY26. Now, we maintain our earnings estimates as the results are in line. Our target price is capped at 35 ringgit, tagged to an unchanged 30 times CY26 PE. Note that our target price also includes a 2% ESG premium, given its ESG score of 3.1 is above the country median. The downside risk to stocks includes slower than expected orders, a loss of major customers, obsolescence of technology, and unfavorable forex movement. We maintain buying the stocks as we think, despite the tariff-related uncertainties as well as forex headwinds, its profitability should be supported by overall higher revenue and economies of scales, as it stands to benefit from the robust demands for the AI servers and peripherals, the recovery in the automotive sectors, new capacity ramp-ups, as well as its strategic diversification into Thailand alongside with its technology pivot. Maintain buy on the stocks, target price as 35 ringgit. Thank you for listening. I think that's all from us today. We will see you again tomorrow.